the only way you can go wrong is by not owning assets. Like as long as you're owning quality
Yep.
assets, keyword quality, you're going to be fine. Like you're going to grow your wealth. You're going to ideally stay ahead of inflation. Like that's the goal, and ideally get ahead of inflation to where you can kind of compound above inflation, so your wealth expands into the future. Like that's literally the game. So real quick, this episode was recorded right before the tariff war started to heat up again. The day after we recorded this, Trump announced a 100% tariff on China starting November 1st. This came after China set new restrictions on key semiconductor parts and added new port fees targeting US ships. The market, of course, did not like that, and over $1.6 trillion got wiped out in a single day, making it the biggest red day since April 2025. So if you're wondering why we aren't talking about that in this episode, now you know. In this episode, we're also going to be breaking down our sit down with Vlad, the CEO of Robinhood. And no, Robinhood is not sponsoring the podcast, although Vlad, if you're listening, we're always open to it. We also dive into the government shutdown. We talk about gold and silver running hot, hitting new all-time highs, and how the market continues to chug forward despite all of the noise. This podcast is a full round table with the whole squad. We got Bafi, Pierce, and Fernando here. And also do me a quick favor. Make sure to leave us a 5-star review on whatever podcast platform you are listening in on. It means the world, helps us expand the podcast, and it takes you like 2 minutes. So make sure to do that. That being said, let's get into the episode. Market Hustle community, welcome back to another episode. For those of you who are new here, my name is Josh. I'm the guy behind the Market Hustle. And for those of you who are returning, welcome back to another great episode. Today, we've got the full squad back with us. It's been a minute since we actually did a full group podcast. I want to say it's been at least a couple months. So it's nice to have everybody back here. And it's what a better time to do it because we're going to have a lot of good topics with all the current events going on. We got a lot of people thinking about the government shutdowns, and more of the commodities markets like gold and silver have been running like rampant. And in addition to that, just the additional AI news, economic news with job losses. Like there's so many topics to talk about right now. And we're going to dive into all of these, just kind of sharing our thoughts, our perspective, and of course, how we are reacting or positioning in preparation for those, if you will. Or maybe if we're making any changes, we're always going to make sure we let you guys know our deeper insights and kind of how we're approaching things. That being said, before we officially jump into the meat of the podcast, let's check in with our lovely co-host and see how they're doing. Let's start with Bafi. Bafi, how are you doing, my friends in New Jersey?
Doing good, man. Doing good. Coming to the tail end of the summer, right? And so kind of getting into fall weather, no shave November. For those of you that are listening, you won't be able to see my scruff beard that's coming along, but we'll see where we end up by end of the winter. Work is good, can't complain. Last episode we had, I was very, very busy with work, but now it's a little bit more balanced out, so that's great. Spending time with family, that's been fun, and making sure I'm taking my time to just relax, decompress. You know, prioritize taking care of myself, which is really an important investment, which I hope everybody's doing the same as time goes on. So yeah, feeling good, man. Let's get rolling. It's good to be back on here once again.
Well, great to have you back, Dad. Great to have you back. Let's jump over to Pierce. Let's see how Pierce is doing in Southern California. How's it going, my friends?
It's good, man. It's not as sunny as it usually is, to which, I'm not gonna complain. I get sun 9 months out of the year. But it's been well, man. Life is good. Just been working and just watching the markets and stuff. It's an interesting time to kind of see if people are speculative right now and people aren't speculative right now. And I'm excited to see what everyone else's opinion is.
Yeah, I feel like we're kind of at like a fork in the road with the
Exactly.
markets, where like half the people seem to think that the markets, still have plenty of room to run up, and then the other half are just like, this is getting too crazy. AI is starting to get a little too hot. It's like maybe the AI narrative is too hot and stocks are overvalued. It's like there's just all this tension in the Wall Street space, and of course, most of us like we're all long-term investors. Fernando's a little bit more active than us, but I think even him, like he has core positions where they're more long-term. And it's like at the end of the day, we're definitely going to touch on these, but I just want to remind everybody, there are strategies you can implement that kind of keep you above the noise so you can continue to play the ownership game rather than having to, play the what the hell is going to happen game. Because there's always going to be moments, even just right now with so many variables going on, where there's just a lot of confusion and you don't really know what insights to trust or to believe. And that can kind of lead you to make decisions you might regret later. So, of course, we'll make sure we tie everything back at the end of this episode to practical takeaways. Nonetheless, we'll still touch into these important topics because I think it's important to be aware with what's going on, just so you don't make irrational decisions that you regret later. But good to have you back, Pierce. We also have Fernando. Fernando is in Florida. Fernando, how's it going, my friend?
Everything's going good, man. I think everything you said makes so much sense. I am active, but I've been having to make some changes due to the some of the uncertainty and changes as well. You kind of have to follow the market as an active trader because every day something changes. So yeah, I've been good and just changing my strategies and getting better every day.
Well, good to have you back. Good to have you back. Well, cool. Yeah, it's great to have everyone here. I think I was just going back into our like the podcast episodes, like our last episode. I think the last time we were all together on a podcast was it Vlad?
Yeah,
I think it
yeah.
might have been
Oh,
Vlad was the last
Yeah,
time, we were
yeah, it's
all
been a
on
while.
the podcast, just because it's been hard to kind of coordinate. But yeah, let's
Life,
touch on that
life,
real quick.
life's been lifing, bro.
Yeah. Yeah, no doubt about that, man. How do you guys think that podcast went? I mean, that was a couple of months ago, but that was such a incredible moment to be able to sit down with the CEO of Robinhood and just get some deeper insights.
Yeah, I think that was really a fun one. And I hope all the listeners got a chance to dive into that. If you haven't, make sure you do so because that's an exciting one, especially before, kind of the Robinhood stocks started moving up rapidly. So for us to get an inside, high level insight information on the things that's being worked on, things that they're rolling out that they kind of disclosed or mentioned some of those to us during that interview. And now you see it coming up in real life as you saw it in their summits and stuff like that. So it was really, really, really fun, man. It's good to see that the company is doing well. They're rolling out more products to help, investors and give them the tools and the access. Not only just that, right, but also the education, right? They do have a lot of educational tools available for all of us to leverage. So really cool to kind of have had inside scoop on that, be close to the CEO, kind of really be in the same space, understand the direction that the industry is going in, and clearly they seem to be putting the right things in place and pushing the right buttons, and the stock reflects that for sure.
Yeah, I agree. I think for me it was a pretty unreal podcast just because we were able to sit down, talk to Vlad himself. And it's like, as an investor, even a lot of people who listen to this podcast, I'm sure like you do research and like maybe you watch some video clips, but it's kind of different. Like when you're in there, like in the room with the CEO, being able to ask him questions that you're curious about, and just get like those deeper insights, like in person. I thought that was really cool. I'm curious if any of you guys have some like deeper takeaways of like what that converse or how that conversation kind of maybe made you change your mind on Robinhood, or just having that conversation with the CEO made you kind of look at things a little bit differently with Robinhood as a company.
Vlad's an animal. Like that's just the best way I can describe it, dude. I mean, like I don't know if anyone's. I mean, I'm sure everyone's watched the movie where it's like the boss is like the big dog working 25 hours a day, and it's just like that. That is Vlad. Like this guy, you could just tell his brain. Even when you ask him a question, he's thinking about something else, but he answers the question with such just like he's just so precise with it, and you could tell there's a reason where he's at, and it like. I'm not a Robin Hood guy. I'm not gonna lie. I told Vlad this, I think, on the pod. I'm not a Robin Hood guy, and I don't think I'm going to be anytime soon. But it is very impressive to see where they've come from a kind of quote unquote meme stock trading platform to, offering, IRA matches and all these type of things, credit cards, and pushing out all the new tools that they do. It's just, big props to Robin Hood.
Yeah, no, I love how we were able to make history with the podcast, having this in a timeless, I guess, capsule on the podcast. But I also like how we were able to stay relevant to such an active company, right? What they're innovating and everything, all the innovations they're doing, I feel like at some point other institutions are going to follow, and being part of, that innovation at the moment, live, sitting down there, and Vila telling us all these things, and they're actually, you know, creating them now.
Yeah.
It's huge. For everybody listening, like I know people were taking away like what he was saying and then actually seeing it on your app and being able to use it 2 months later. It's pretty cool.
The speed of execution with Vlad and his team is absolutely insane. Just studying him as a founder is pretty interesting from like an investor perspective. And yeah, it was just really cool that I think their company was willing to talk with investors and invite us on, invite us over to their headquarters, let us kind of speak with the CEO, and a lot of their executives have come onto our podcast just to share their insights. And I'll say this, as much as I like Fidelity and even Vanguard, it's like we never hear from their executive team, and they don't really talk with the retail investors much. So I
Right.
gotta respect Robinhood a bit for being willing to communicate and try to be as transparent as possible. And I can even imagine, like, if you're running a financial firm the size of Robinhood, I mean, of course, they're not like the size of Vanguard or Fidelity, but they still have a lot of liabilities and risk. And the fact that they're willing to kind of put themselves out there in the media world, well, not only is it smart marketing, but it's also like, they're kind of being vulnerable because like they don't have to,
Yeah.
expose their thoughts and whatnot into the real world, but they choose to. And like, in my opinion, you kind of have to respect that from a business perspective, where the CEO is willing to kind of have these conversations live with people all around the world.
Yeah, and I think they've kind of really figured out a sweet spot per se, right? Of kind of championing the entrepreneurial spirit slash the innovative, mindset of the modern day world, the modern investor, if you will, right? So kind of understanding that audience, that broad audience and new audience, and being transparent, being vulnerable, right? Being relatable, and communicating in a way that we best receive information or feel comfortable with or kind of feel trust. I think that's really neat. To your point, we don't hear much from, say, Vanguard, Fidelity, right? Some of the higher ups there in terms of what strategic models and plans that they're really working on. But we do feel a little bit more comfortable as a generation with Robinhood because I guess we kind of grew up, around it or on it. So, that's a really good pickup on that. Yeah.
Yeah,
Yeah,
interesting.
I'm gonna mention like as a millennial, uh, as a kid when I was a kid, I would watch SpongeBob. I know probably people have watched it, but I feel like the institutions, just these big institutions like Vanguard and Fidelity, are Mr. Crab, where they're hiding the secret recipe, taking all the
Yeah.
money, and they don't want to give the recipe. And it's like, well, Robinhood at least is giving us the recipe, right? So that's how it kind of came to my head that they feel like they're Mr. Krabs.
Yeah,
Yeah.
I guess it just feeds into like the type of investor, right? Like their audience or target market, if you will. So, I guess it makes sense.
One thing that's kind of shocking to me is that no one has, I mean, maybe they have, maybe it's behind like, closed doors and things, but no one's bought Robinhood yet. For being such a huge platform and like the way they are. I mean, you look at it just like with anything, Poppy or Celsius or any of these companies, like, let's just these are soda companies, for instance, they get bought up by Coca-Cola and Pepsi and all these different things. And, then they become more of a monopoly. And so I'm so surprised that no one, because, Robinhood has made such leaps in the last 5 years that no one has, at least maybe Vlad hasn't folded yet, respect to Vlad. He's got a vision.
That's kind
I
of my thought.
understand.
I think
Yeah,
Vlad, talking with Vlad, it's like this guy is serious. Like he's a
Yeah.
monster. He's an
you can tell
execution
he probably
machine.
got like a good 20, 30 years in him
Yeah.
Oh, for
before
sure.
he even kind of feels like, okay, that might be something to consider. But I think also one thing is also a maturity in terms of
Yeah.
like the business maturity in the industry over time, right? It's very rare that you see a lot of financial firms slash investment banking firms pick up another, unless it's like a situation where the bank is, going out of business or the firm is kind of, in a tight spot. And so
Yeah.
I can come in and buy it like pennies for the dollar value, right? Other than that, you don't see a whole lot of business development slash acquisitions, mergers, and stuff like that. I think also the nature of the industry itself, right? Like to Josh's point, Vlad and Robinhood are not coming in to just kind of build scale and then just get swallowed up by somebody else, right? Like they really want to be on their own 2 feet and challenge the industry, challenge the ways of working, challenge the tools, resources, how we increase access, and really give these big firms a run for their money as well and take some market share. So competition is always good, right? It helps produce some of the best services and products. And I think he's firmly behind that with his entrepreneurial energy. So that's cool to
Yeah.
see.
For sure.
Without a doubt, without a doubt. Well, let's go ahead and pivot over to another big topic that a lot of investors are thinking about, and that is just the government shutdown. At least at the time of this recording, the government has been shut down for about a week now, and Wall Street has mostly shrugged it off. The stock market has actually continued to hit all-time highs despite the shutdown, and historically, that's actually pretty much the precedent. Like most of the time, the market pretty much just wipes or just shrugs it off. Like over the last, I want to say 8 or so shutdowns, the market really didn't react much. Maybe it did a little bit prior to the government shutdown occurring. And then eventually the market just kind of digested the news and continued on doing what it's doing. So this isn't completely uncommon, like with the market kind of shrugging things off. But I'm curious, like how you guys are kind of maybe seeing things right now with your perspective. Maybe
Mhm.
Bafi, if you want to start with us, just kind of
Yeah.
share what you're kind of seeing and what you're kind of thinking about this
Yeah,
current
man. As
shutdown.
we were kind of preparing for this episode and doing research and stuff like that, right? I realized, like, to your point, you just said it too. We've had, first and foremost, if this is your first government shutdown, you might be quite nervous, worried about, okay, what's going on? What does this really mean? How does it affect my job or my life? Does it mean that, when I file my taxes, am I going to get my like $1,000 that I'm gonna get. You know what I mean? Like, um, and it's okay to feel like that. But again, these things are unfortunately somewhat normal and happen periodically when both parties can't seem to kind of fully agree on some big policies and big changes that impacts the nation on so many levels and a lot of different programs, right? But it's interesting as we're doing the research and prepping, I realized that it actually doesn't have much impact in terms of how the stock market operates, how businesses operate. It doesn't really influence their decision making. It doesn't force them to pivot their ways of operations. If anything, tariffs have way more impact in the push and pull of how businesses operate more than the government shutdown. So, yeah, market definitely just shrugs it off. And I'm actually kind of taking that type of approach mentally as well. I'm also just shrugging it off because it could take a week. It could take, I think the longest one was like in 2018 and it was like 30 days or something like that. But I'm just shrugging it off because they will figure it out eventually and they'll come to some sort of agreement in the middle somewhere and continue. But as you can see, the market keeps going, which means you should just keep going and keep putting one foot in front of the other.
Yeah.
Yeah, it hasn't really affected the market as much. That's what I've seen. I think definitely has. I mean, I took a flight the other day and delays are pretty bad. That's for sure. So
Mhm.
maybe some airlines will be affected on this, but the long term. But other than that, I think the market's still kind of running its rally.
Yeah. Yeah. And to what Bafi touched on, the longest shutdown was back in 2018. And that was for like I want to say a little bit over a month.
Wow, check me out, man. I'm pretty close on the money.
And yeah, so and the market back then, it did, at the S&P prior to that shutdown fell about 7%. And then after the shutdown was resolved, it recovered 10% after things kind of were said and done and the deal was signed. And so I think Wall Street's kind of just, we've seen this movie before, and sometimes Wall Street forgets the past or some of the past lessons. This time it seems like it's remembering and kind of shrugging it off. And I would say my opinion is like, as long as we don't get a curveball, like as long as Trump doesn't come out and say something crazy and it's shut down indefinitely, I would say we're probably going to see a historic precedent where it'll probably end up the market's just going to continue shrugging it off. Uh, but yeah, it's been interesting nonetheless because even what Fernando said, it does have real world impacts. Like we do see disruptions to certain areas of the economy, whether it's the airports, whether it's a lot of national parks kind of get shut down, but even just certain government agencies that some businesses may require on, they might not be able to. Some businesses might not be able to get what they need to kind of continue operating. So I'd say the longer the government shutdown, the more chance of issues kind of popping up. I guess that's kind of like a thing you can kind of keep in mind. But overall, if you're a long-term investor, just keep stacking assets. Stack quality assets. Don't let the noise kind of disrupt your original mission. But Pierce, what about you, my friend? What have you kind of thought about the current government shutdown?
People are stupid, man. I mean, it's just people can't agree on anything. It is what it is. I mean, it's the people who aren't getting paid who are going to be affected, I think, the most out of everyone. And it's like, the smaller businesses, because I mean, small business loans and anything backing, for small businesses the government provides. It's, those are the people who are really going to suffer. And I think the numbers, let me see what it is. Like around 900,000 people aren't getting paid right now, which is huge. And I mean, that obviously has an effect on, data and stuff like that. So, so that's pretty much why markets get a little jumpy. But like you said, everyone's just kind of powering through everything right now. It's a bunch of hoopla. Just keep your head down.
Yeah, Piers, I think you and Fernando both touched on something really, really important there, right? Piers just touched on the payroll impact and how that affects, people that are exposed or work in these environments that is government related and centered. And so I think there's a big challenge there in terms of human nature. The fact that they can't agree on something is quite normal. It's really hard to get buy-in on everybody to agree on the same thing. I'm pretty sure some of us, even with our own parents or with our own siblings, we can't even agree on, let's say, a restaurant we want to go to or some of the smallest things to kind of just make decisions on, right? So I think understanding and embracing the difficulty and how hard it is to get so many different people at different stages of life, at different spectrums, or have different priorities, right? One party or one group might think this program is worth funding, another might disagree. I've come to realize that in life, most of us are, for the most part, right and wrong at the same time. And that is not exclusive to a certain background, demographic, age, whatever. It's all of us, So I think level setting and making sure that, hey, we're not thinking we're better than somebody else just because of whatever position we have or influence is really important to understand that it is difficult for everybody to agree on things. And Fernando did touch on that a bit as well, and some of the industries that are affected as a result, and people will suffer, unfortunately. So when we say the market is brushing it off, we're not saying that in terms of the market don't care about the pain points, about the struggles that people are dealing as a result of it. We're saying from a technical, financial / institutions perspective within the stock market and the economy, it is not being prioritized or put as the top concern per se. You know what I mean? So that's why things are still chugging along nicely. But of course, there are real people that are negatively impacted by it.
Yeah, and if you're an active trader, I think one of the things to look at, as an active trader, you're probably looking and researching, but something I focused on is who's affected, right? If there's ever a moment where things shift and at some point it has to open back up or something has to be done, it's going to come back, right? So what do you do in between that time? You have to kind of look at companies that are being affected, right? Like I said, airlines, TSA. I mean, TSA is not publicly traded, but I think Clear is a company that's publicly traded, right? So you can look into different companies that will be hit by this, and then you can either jump and grab that low, grab that dip, or you can also short or go long.
I think a good lesson to take away from at a high level is that the stock market and the economy can kind of operate on different playing fields, right? So, like, you might see the stock market brushing things off at a high level and think, well, why the hell is the stock market doing that? Like, there are jobs being impacted negatively. People are getting furloughed, and like, isn't that going to impact the economy? And in the short term, it very well could to some degree, but the stock market takes into consideration the future. Like, it's forward looking. So it's not always taking in consideration what's going on right exactly now. It's kind of disconnected from the real economy as we experience it, in our daily lives. And that's something to kind of keep in mind as you go along your investing journeys. Because if you're always thinking that the stock market right now is a reflection of how the economy is right now, it's going to drive you crazy seeing the market go up when maybe the economy is losing jobs or the government shut down. Like, you might be thinking, like, why is the stock market doing this way? It's rigged. Everything's rigged against me. But the one thing to keep in mind is that, yeah, the stock market and the economy are separate. The stock market tends to be future looking. It's looking at how are these businesses going to produce profit over the next 15, 20, 30 years. And so when we say investors are brushing it off, it's not that they're saying, kind of to Buffy's point, it's not that they're saying that, these jobs don't matter or, it's not a big deal. It's that they're focused on the long-term perspective of business growth. And I think that's an important perspective to embody even in your own life as an investor, especially if you want to do well, is paying attention to the how are these businesses going to operate on the 10 to 20 year time frame. It's much easier to kind of keep your head out of the craziness of the short term, like with whatever's going on, especially if the market starts to dip, when you think about the long-term perspective of how these businesses are maneuvering and just going out through, just doing their thing throughout the economy, if you will. But at the very least, TLDR, the economy is not the stock market. The stock market is not the economy. They're kind of their own little playing fields, although they do kind of interact in some way or another. The stock market's always future looking. It's like just something to keep in mind. But
Yeah,
yeah,
good point on that, man. I think another thing we need to kind of keep in mind too, and like though many of us may not be working for the government per se, and so we might not be impacted or affected, right? Even many of our listeners may not be government workers, but try to put yourself in that shoe and see that how would you handle that situation right now? Let's say you're one of the 900K plus people that are furloughed or don't have the same level of resources coming in every 2 weeks, every month, whatever it is. How do you stack up right now, right? In terms of if something happens, of course, we all have to assess our own job safety and security and look at the trade-offs, right? Government workers have some amazing benefits, some advantages. On the flip side, unfortunately, periodically, if you get one of these shutdowns that impacts your area, right? There are trade-offs to that. Doesn't mean that if you're working for a publicly traded company or like a for-profit company, doesn't mean all is well, right? But I think it goes to show why understanding risk is important in all areas of our lives. Hence why being strategic with your finances, when being able to save, being able to invest, right? Reducing your debt and certain things allow you to be able to weather these storms better, right? Because I'm pretty sure nobody woke up and thought, oh yeah, tomorrow we're gonna have a government shutdown, and so therefore I'm not gonna no longer gonna have, essentially a money printer machine that's gonna provide me money every 2 weeks to take care of my family and my responsibilities and so forth, right? So these things don't come with an invitation and a date like, hey, you're gonna be furloughed or there's gonna be restructuring or job cuts in a month or a year from now, and so here is the date that is gonna happen, and so prepare accordingly, right? We should already be preparing, not from a scarcity standpoint, not from fear and like in a position where we're like, oh no, we should be pessimistic about everything. But we understand that in the scope of life, the realm of life, a lot of things are going to happen. And many of us will probably lose our job probably at least 2 to 3 times in our entire career at some point, So it's just something to keep in mind, even if it doesn't impact you, just, don't live life as, oh yeah, well, that's not my problem. Because it could be your problem someday. And so how are you preparing yourself? And if it's not your problem now, be grateful and be happy about that, but also make sure that you're preparing because that's the best time, right? To prepare yourself, not for just difficult moments, but also times where you can take advantage of opportunities, whether it's in the stock market or different businesses you're interested in or careers you want to pivot into. You want to give yourself as much fighting chance as you can.
Yeah, and there's two things that we look at as when you're doing like day trades, which is you have reactive and proactive looks to the market. So if you're working a stock and you're trading it like per hour or per minute, you are more trading in the reactive side, where if some news hit and you have live news or you have an inlet into a feed into active live news that will give you right away, then you're trading in a reactive point. But proactive is kind of you're planning for the longer run per se in the trading aspect. So you're waiting more for that company to either in their earnings report, bad earnings. And you can kind of start doing research today, tomorrow, and or in the next weeks before they do the earnings that they're kind of missing out on certain financials or they're being affected by the shutdown per se. So those are different kind of lens you can do. But usually when you're kind of trading in a smaller time frame, you're reactive trading, which is it could be Intel being, 10% stake bought out by the government, or, all these companies now investing in Intel, and Intel is flying up the roof, almost going back to their old stock price. So it's definitely something to look at if you want to look into trading,
So it seems like you're almost trying to position to like front run the news in a sense. So you are trying to get an advantage over what's, what the investor hive mind is kind of
Yeah.
thinking at. And then your goal, with your strategy is to try to front run that and then, get in and get out before the market, Mr. Market, kind of changes its mind. I think, yeah, it's definitely interesting just to kind of hear the gameplay, or like kind of how you plan things with that. And I think at the very least, for even long-term investors, you can learn a little bit about like how, more about the sentiment of the market, and then maybe that helps you stay grounded when the market, when shit kind of hits the fan, and maybe you start to kind of lose your eagerness or your easiness or whatever. A lot of the times, uh, traders are kind of benefiting from people panic selling. It's like, as long as, if you panic sell, in a way, you're kind of giving up your assets to people who are kind of taking advantage of that sentiment. And I think it's good just to kind of highlight from like a long-term investor POV, is that just understanding kind of how active traders are thinking about the markets can kind of give you some insights into, maybe just different perspectives that you didn't even consider. I think at the end of the day, like, you don't have to trade. Like, trading, most people are not going to do well because it requires extreme discipline, and I'm sure Fernando can probably attest to that. And at the end of the day, it's hard enough for most people to just handle long-term investing, just the ebbs and flows of the long-term cycles, let alone those micro movements. So,
Mhm.
I think, just to kind of circle everything back to the podcast, there's many different ways that you can approach investing, or the stock market in general. But I would say, especially during times when things maybe get a little uncertain, it always circles back to like having the foundation in play, right? So like having your emergency fund set up, having at least a foundation of index funds. That way, you can approach different things from a position of strength, whether you want to take additional risk, with individual stocks, whether you want to try to be more active with like trading the reactions of the markets, or whether you want to take more career risk, right? Maybe you want to start a business. Maybe you want to, try to jump into a new industry that could pay you more. Like, that alone is also pretty risky. But there's many different ways that you can take like those higher swings. But at the end of the day, I think it's good just to kind of learn from different perspectives, and see how different people in the market kind of consider things, or see what's going on in the market, because like that's gonna be how you learn what works for you as an investor, and how you can build out your own strategy or system to adapt to that type of market. So I just wanted to add that caveat, so people, maybe if they're first time listening, they're like, "What are you talking about? I got to start trading?" It's like, no, you don't have to start trading. In fact, I wouldn't recommend anybody who has been investing for less than a couple of years to even touch trading. Definitely get your foundations in first. Fernando is here to give us just different perspectives of how maybe traders perceive what's going on in the markets now, and maybe how they even perceive opportunity. Um, that being said, I do want to ask, gold and silver. It's like, this is another big topic that a lot of investors are, just thinking of. It's kind of top of mind right now. Gold and silver have historically, especially like the last 15 years, been more like stagnant. Like, they really haven't seen much signs of life. And it wasn't until recently, like, the past year or so, that we've seen some massive run-ups in gold and silver. And I've had a lot of investors reach out to me asking, hey, what are your thoughts on gold and silver? Should you have it in your portfolio? Is this something that I need to, is this something I need to have? Is this something I should be investing in? So I'm curious to get your guys' thoughts of like how you kind of view these commodities, gold and silver. Um, Maybe your thought process of how you potentially approach this, like if you decide to diversify in these asset classes. Uh, Maybe let's start with Pierce, because I know Pierce actually has a,
Yeah,
he's our silver investor.
yeah,
So
he's definitely the perfect person to pick his brain when it comes to this area here. I'm excited. I'm taking notes.
for
Okay.
context, Pierce has been investing in silver ever since I started talking with him. And that was like a couple of years ago.
Silver and
So
gold, dude.
he,
Silver and
he's been
gold.
in he's been in these assets before it started to run up. And for context, gold is actually up around 50% since the beginning of January,
Yeah.
and silver is up nearly 60% since the beginning
Yeah.
of January.
I'm gonna sound like a doomsday prepper, I guess. I'm gonna sound like one of those people in the bunker. But I mean, Okay, so how I got into it is my grandfather was into it, and then unfortunately he passed, but he left behind silver and gold. And so obviously being the age that I was at that time, I'm like, what the hell do I do with this? Stack it like Legos. What do I don't understand what to do. And then I started getting like an understanding of it, and the real world value is that, obviously the United States used to be on a gold standard, right? So everything was backed by that, but then we got taken off of that. So then people, then right after that the gold fell, right? And fluctuations follow. Gold and silver usually follow the same trends from whatever I've seen in the last, everything I've looked at in history. But it's people invest in this type of stuff, like these precious metals, when times are like uncertain, and which is a kind of a crazy thing right now because I don't know if I can't speak for everyone else, but my portfolio has been killing it the last 6 months, last year and a half. My portfolio has been killing it, and so it's like it's kind of crazy to see the run up in silver and gold over the last, I don't know, 3 or 4 years. And like Josh said, like I've been advocating for these precious metals for a long time, and what I advocate for other people is, you know, yes, you can invest in like the futures of gold and silver, but buy the actual thing itself. Because if something were to happen, this is my doomsday prepper talk. Something were to happen in this world, your cash is, when if your credit card stops, a dollar bill is not worth anything. I can go right now, like when I travel, I bring something that has precious metal, a watch or something, when I go to Europe, because gold is worth the same amount of money there as it is here, and it has the same value. Same thing with silver. And that's why I think it's such a good thing, because it's currency. I mean, it's the oldest form of currency, silver and gold. I mean, yeah, you could talk it with like grains and flour and salt and stuff like that, but like, this is like real world value. And I think that people drastically underestimate the value of these things. And there's going to be pullbacks, absolutely. Like today, so like gold dropped, like it's still up, but gold was at, let's see, it's peak today. Gold was at 4,075. Right now, gold's sitting at 3,990. And so, I mean, it's going to have fluctuations and pullbacks and stuff like that, but that's common. And there's always going to be value with it. And for me, I think silver's a lot more obtainable for 99.9% of the population, unless you have $100,000 sitting. If you put $100,000 in silver next to $100,000 in gold, you're like, there's nothing here. I mean, it's minuscule. So, I mean, I think actually having like silver, there's real world applications, as in like technologies and anything like that. I mean, obviously jewelry and stuff like that, but I don't know. I think that in the future it's gonna go skyrocket, and thankfully it has, but it's just, I don't know. I sound like such a boomer when like if anyone who follows me on Instagram, I post about it every once in a while, and I have my friends. 'Cause I'm 23. My friends around the same age. All my friends are invested in Bitcoin and stuff like that. I'm like, hell no, dude. I'm invested in silver and gold, and it's done well, man. Like I don't know, and the best place that I think that people can get these things from um, is the Canadian mint. Yes, I live in the United States, but if you look at 1 ounce maple leafs and stuff like that, like I have 5 ounce bars, I have 1 ounce coins in gold and silver.
Wait, these are Canadian like leaf gold bars?
Canadian maple leaf coins.
Oh,
So
coins. Okay.
I have the 5 ounce bars that are, obviously 5 ounces, but then I have the 1 ounce coins. And the 1 ounce coins are way more intricate than anything the United States has ever produced. And so people like to forge, gold and silver, they fill it with zinc or anything like that, a heavy metal to kind of get that weight of it. And then they try to scam you with it. No disrespect to anybody, but no one's looking at Canada to see if anyone's doing anything. No one really thinks about Canada like that. It's Canada, great people in Canada. I love Canada. It's Canada though. And so for me, I've looked at it and said, like, okay, this is better than having gold, or not like having American gold, American silver, 99.9% purity. Yeah, 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 same thing. But just the intricacy of the coins themselves is, you can't fake that, dude. I mean, you look at it and it's so precise. But I can go on and on and on. I want to hear everyone else's perspective on how much of a boomer I sound like.
No, I love it, Pierce. I think it's cool that you have some deep technical knowledge with
Yes,
the gold and silver world, which is awesome.
yes.
And what better time to bring that out now that gold and
Yeah,
silver are kind of having their moments.
yeah.
My perspective personally, is I think gold and silver, I mean, it could have a place in your portfolio, but the way I think of it is I think of it as a hedge against the modern financial system. I think this is kind of like the consensus really in the financial world is especially like larger institutions, they
Yeah,
see gold and
completely.
silver as a, oh shit, the system's collapsing. I better
Yes.
buy some of this stable, like the uh the gold and silver commodity because gold and
Yep.
silver have been a part of human societies ever since we have like documentation of human societies. So it has a very long historical context of just wealth, like storing wealth. And to Pierce's point, we're all very familiar with the money printer at the Federal Reserve, and unlike the Federal Reserve, they can't just sit there and print gold. It's like they can't, just create gold and silver out of thin air. Like, yes, they can mine it. It's like mining's a thing, but that's a much harder process and it's still kind of constricted to whatever supplies out there. Where at the money printer, technically they can print in unlimited amounts. Like that's the whole thesis behind gold and silver. Is it's kind of like a way to exit the system and kind of hedge yourself or protect yourself if like everything goes south, right? Like if the worst case doomsday scenario occurs, gold and silver would ideally kind of hold their value. Now, the counter argument is like you don't want gold and silver to go up to millions of dollars because if that occurs, that means the oh shit moment occurred and everything, the whole system kind of collapsed. Now, it's a very, I'm not, for me personally, like I'd rather own stocks and businesses because I think they're going to be more likely to kind of continue to do their thing and be more productive cash flow wise. But I can understand like having maybe some exposure to gold and silver, especially if you have like higher wealth like if you're at a higher wealth position and maybe you're kind of more in the wealth preservation mode rather than more of the wealth growth mode. I mean, I say this and gold and silver have ran like 40 to 60% in a year, but historically, like that's not common. Like this is kind of like an unprecedented moment. Uh, I don't think it's wise to expect it to continue to go up 70% year over year for the next 10 years. Is it possible? Like anything's possible in the markets. But at the end of the day, the way I see it is more of like a hedge against the modern financial system. Um, Warren Buffett has said it. Gold and silver, like they don't produce income, like they're not businesses, like they don't have cash flow. It could be a good way to like store your wealth. Like if you have lots of wealth and you're just looking for, taking the bare minimal risk, but also still preserving its purchasing power, gold and silver could be a wise area to kind of store your wealth in. But I would say if you're in wealth creation mode, I personally think it's better to kind of focus on businesses or cash flowing businesses. I think long term you'll get a better return. It's a more it's easier to take risk or more aggressive risk with like businesses that actually have cash flow that are growing, that are expanding, compared to more of the stable assets like or historically stable assets like gold and silver. Just my thought process. Curious to see what you kind
So
of think, Bafi or Fernando.
I think gold, so like you can physically buy like a gold bar, right? And that's tangible. But I think you can also trade it through ETFs or mutual funds that companies that own it. But something interesting I tried last year was I traded gold through futures. So you can trade commodities through futures, and you buy a future on like gold or silver, and you're just buying a contract speculating that gold price will go up. And in the futures world, just to give a little insight on people that don't know what futures is it's kind of like options, but it's 24/7. But you're trading more on just it's a different way. It's more like not contracts, but actual futures is what they call it. But it's more speculative. So it's more like tied to not a stock, but a commodity. So silver, gold, and you can also trade the SP 500. But this is kind of you're speculating that gold will go up or gold will go down, and you buy a future. But that's a way that you can trade gold. So I just want to throw that out there.
Good point. I think for me, I mean, it's interesting just kind of listen to everyone's perspective on this, right? And to all of your point, globally, we know that gold is the safe haven, especially during economic and geopolitical uncertainties, right? It's like right now, it's like anything that seems uncertain, oh, I'm running to gold, right? Because for humans, it has been part of our trade slash DNA to know that, okay, gold is the safe haven for us, no matter, kind of what's happening with every other form of transactions or currencies and so forth. So that's one. And another thing is real estate rates, right? There's a lot more activity now. We've gone like, before it was like 9 months of like no rate changes, no rate hikes or reductions. So I think as inflation seems to kind of be a bit sticky, I think that puts pressures on banks, right? Not to hike too aggressively or cut aggressively, which always benefit gold because we're like, well, we don't kind of know what's going to be happening, and they kind of don't seem to know in concrete evidence that what's going to be happening. So we'll defer to gold. Also, U.S. dollars has been declining a little bit steadily over a little bit of time this year, and China has also been beating that global currency dependency on USD, right? And calls for a little bit more of a diversification. They've been kind of beating that drum quite a bit, which ties into policy and currency debasement concerns, right? At the end of the day, there are large government deficits, right? Rising national debts. We're very much familiar and aware of that, especially here in the US. And so I think it creates a little bit of somewhat of a little bit of a fear slash, kind of feeds back into that uncertainty loop. And then central banks are also accumulating, and institutions are also accumulating a lot of gold. I mean, right now, like gold reserves are going up insanely, right? So central banks globally are loading up on gold. China in particular have actually increased their reserves probably the most out of everybody. I mean, they are going ham in a tremendous way, right? So I think all of that does increase or add value to gold. It's just like if everybody's buying, let's say, Nvidia, right? Nvidia stock is going to go out the roof. You know what I mean? Now, Nvidia is a good company, thank God. But like, even if it's a bad company, or even if it was a bad company and everybody's buying it, it doesn't matter. The value of it is still just going to go up, right? To Josh's point, sometimes the economy and the market or certain things don't operate in the same way. But gold and silver and some of our commodities have a different, I would say, like they operate in a different space, both physically and psychologically for us humans. So it's really cool. I'm glad that Pierre's also been around this for a long time, because it's very rare that you kind of hear some of the younger generations kind of focus on gold and commodities and some of these collectible items, right? You hear crypto all the time, that's for sure. Right? But Pierre seems to have a really, really good broad range of continuous learning, not just throwing out the old because it's old, right? There's a reason why there's old and goody. And so he's learned all of those asset classes, the values those bring, right? The safety net, the growth, and has blended that with, our modern markets, real estate, along with crypto, digital currency, and all these other forms of assets that we embrace. So I think there's a lot for all of us to kind of learn from Pierce and his experience there. And think about it, when Pierce probably first bought gold or received it from his grandfather, it's not like gold was doubling every week or every,
No.
Oh,
it
no.
wasn't. So guess what?
It's actually down.
Yeah, the same strategy that we teach and preach about, hey, focus on long term, keep adding, stay consistent. Sometimes it can look flat for a while. Sometimes it can even go down, right? And you double down when that happens. But guess what? Pierce stuck with it. If he was impatient and was like, let's take it, gold is boring. Bitcoin is up 20%, 50% in like 2 months, and just dumped all the gold and just go, there's a lot of lessons here. And I hope that as you guys hear Pierce talk about it, we see things happen in real life, and you've been with the community for a while. As you listen to the podcast, I hope that you're kind of catching some of those lessons that may not be so like tangible or so obvious, right? Like just always reflect and think a little bit, take time from the noise and kind of see, okay. So Pierce, congrats, man. Good job on holding out for the long term, and it's paying off, man. Gold is killing.
I appreciate it. It's just like Josh said, it's more of like a wealth preservation tactic, right? It's just like an asset class that, it's just, and I don't know, for me, it's like, obviously I keep all that type of stuff locked up. It's not like, you just keep gold rounds and silver rounds and bars in your room and stuff like that. Like, obviously keep things
You should wear
locked
it
up.
around your neck.
Exactly, dude. I mean, I do, but see, that's the thing. It's like I said, it's like when you look at anything, I could wear a gold chain like every single time I travel anywhere in the world. I will wear a gold chain or I'll put it in my suitcase. I'll have a watch, I'll have a ring, I'll have something because it's worth money. And I don't think people understand the value of it. Like when you go through TSA, you have to declare more than $10,000. And obviously some people are cheeky and they'll bring $9,999. And it's like, okay, cool, bro. That's a US dollar though. What good is that going to do you in Ukraine? What good is that going to do you in Puerto Rico? What good is actually Puerto Rico is a bad example, but you know what I mean? Like it's just an interesting thing. And it's like Josh said, I hope it doesn't keep on doubling and doubling and doubling and doubling and doubling because then it's like, oh shit, okay. But like, I don't have any plan to sell this or liquidate or anything like anytime soon because this is for the oh shit moment. And like Josh said, like if it does go to the moon, like the oh shit moment happened, I was like, then it's just like, I mean, I don't know.
Kind of
I think
bittersweet. It's like you'd rather it not happen, but then
exactly.
again, you have gold. You're like, well, I'd kind of be richer in a sense.
I'd be a monopoly here because
Yeah.
most people like,
I-
have a gold chain or something like that, to which is good. But,
yeah.
if people don't want to have the physical thing, just, like Fernando said, buy the futures. I mean, it all
Yeah,
works the
it's
same.
not volatile. I think it's a appreciating asset.
Yeah,
So it's kind of like you buy a house, and it appreciates over time, right?
correct.
So it's like a tangible asset, and similar to stocks too, in a way, because I've seen a lot of like now, gold dealers and watch dealers trading watches and gaining $500 per watch. But if they do that many times, they will start profiting at some point. So it's like a stock, right? Where you buy stock and you trade it, you get the difference from where you bought it if you're going, up on that stock. So it's similar in a way, just not tangible.
Yeah, no, it's interesting, and it's this is a good conversation because like it's good to hear like different perspectives on this topic, and I'll say just another way I kind of think of it. I also think of gold and silver as kind of like a check on the system. So think about it from the perspective of the government, right? Like the Federal Reserve and maybe even like the people that kind of run the government. It's like when you see gold and silver running, it's kind of like a report card of like, oh shit, people are worried. Like we kind of got to get our shit together, right? And
Yeah.
they don't want to see gold go up either, right? The Federal Reserve doesn't want to
Uh-huh.
see gold running
Yeah.
up because like it's kind of a check on them to get their shit together in a sense. And
Yeah.
we saw this back in 2008, the 2010-ish time frame where gold hit like some crazy highs back in 2010, 2012. And then eventually the Federal Reserve, whether you want to say what they did was good or bad, it's like the system did kind of find its own groove again. And eventually gold kind of corrected significantly because people stopped getting worried about it. Like they're like, oh, okay, looks like we found a groove. The business environment kind of stabilized a little bit. Again, whether you think it was good or bad, that's a whole other discussion. But the fact is, the system did kind of stabilize and gold and silver plummeted behind because of that. And I think of it, the same thing right now. It's like gold and silver is increasing because there's a lot of uncertainty with the political system, with inflation, with just like the business environment right now with AI, with all these job losses, the global economy. To Bafi's point, everything he highlighted, like there is uncertainty, and so people who are in cash who might not want to buy stocks because they think it's too risky, or maybe they don't want to take that risk tolerance right now. They just want something a little bit stable. They want to put their cash in a place that's not going to get inflated away without taking risk. Well, if you're an institution that has maybe millions of dollars, you're going to be like, oh, maybe I should buy some gold. Maybe store the cash in gold. That way, it can at least stay ahead of any of the inflation or uncertainty. And I don't have to go and buy stocks that are more volatile and risky. And maybe I don't want to put, my portfolio of millions of dollars, from the perspective of an institution, into the stock market. Like that could also be another reason why we're seeing gold and silver run up. Is it's just people, trying to be more cautious or hedge their bets more with all the uncertainty we got going on right now. But yeah, nonetheless, always an interesting topic to dive into. And yeah, I think the gold and silver versus stocks versus real estate, like you can sit here and
Mhm.
argue which one's
Yeah.
better, which one's not better. I think at the end of the day, if you're a fan of gold and silver, cool. Diverse,
Yeah.
add some exposure to it. You can always diversify your portfolio into it. But there are many different ways to invest. Uh, I personally really enjoy investing in businesses, cash flowing businesses. The stock market, yeah, is much more volatile. Like you have to have the stomach for it. Uh, but like anything, I think to Bafi, what you mentioned, like it is good to like highlight Pierce's experience with silver because he has had his portfolio for quite a while, and for most of that time, it was underperforming. And it's like
Yeah,
now he's getting rewarded for kind of being early to that. And it's like I think the
Exactly.
mistake a lot of investors could make now is like now that it's running up, they're like, oh shit, I got to go get my piece. I want to go get my slice of this. They see the
Yeah.
momentum, and I think kind of running towards the momentum can be dangerous, especially with gold and silver. Like
for
there's
sure.
momentum traders in the stock market, and maybe that works a little bit better because if the company is continuing to grow their profits, they can kind of justify that momentum. But it's like gold and silver isn't generating profits. It's like there's
No,
no like real
not at all.
justification of momentum unless like you could argue the whole printing and everything, but nonetheless, it's just you got to be careful with how you're putting these assets. You don't want to get
Yeah.
in at the wrong time with something like gold or silver.
Yeah, I think it's a really good moment there too in terms of lessons that we're learning as we all invest over the long term. It's like it helps us challenge our own perspective as well, right? Because some people are like religiously like married to one asset class, and it's like if you say, "Oh, this versus this," they're like, "Oh no, this is better. This is the best way to go about everything." And it's like, dude, it's not about right or wrong. The one of the best answers or responses you can give when people try to debate which asset class or what is better versus another is it depends, right? It all depends on a lot of scenarios, variables, situations, right? This situation right now is great and brews really nice for gold and silver and commodities. Uh, a few years ago, we saw what that looked like, right? That was a different situation where stocks and maybe in crypto, when first crypto kind of came a little bit more to the scene, right? That scenario and that environment was perfect for that. Real estate, not too long ago, we saw how rates were pretty much flat, easy to buy, easy to get. Inventory was, everywhere. And so the demand, the money was pumped and was pumped out. And so it all depends on the scenario. It's not necessarily that this is better than the other. There are different moments and chapters of life and time where certain asset classes, right, has a little bit more growth than others. And so I always approach building a portfolio more like building a sports team or a business. You need different people in different positions with different skill sets. And some of the pros outweigh the cons. Some of the cons outweigh, but the most important thing is that the entire team is working together towards a common goal. And when they're called upon to bring their skill sets to the forefront, in this case, gold is called upon to, show why it's gold, pretty much, right? Defend yourself. It did exactly that. When businesses are cooking and the market is rolling on high, that's also doing its part. So I think sometimes we get so stuck in like the asset class war, and it's like, dude, it's not a war. They're all tools and resources you can leverage to get to where you're trying to go. And I think having that approach helps a lot because otherwise you also miss out on some interesting lessons or interesting things you can learn in general.
Yeah, I think what Buffy says is so key. Because I think having exposure on everything is a big deal. Like if you're able to have exposure either to gold, stocks, and even private markets and just different places, a little bit of touch there and there. Like you said, the team or the player will come up whenever things go sideways for another player, which is a good point. And to the audience, I think that's something that maybe researching other assets or other areas of investment is always a good idea because
Mm.
focusing on one could work, but if you have
Yeah.
multiple players,
That's true. It also doesn't mean like stretch yourself too thin neither, or like
yeah,
have to feel like everything you have to have a lot of everything. You know what I mean? You have
yeah,
to
Mhm.
kind of know yourself psychologically, physically, mentally, what you can handle versus what you can't, how much you know about something versus, what you don't yet understand, and what is really important to you. What is your priority? What is the return on investment? What is the return on time? Right? What is your return on joy? Right? You can be making a lot of money in the stock market and then and still be stressed out. And it's like, dude, you're making money, but you're not joyful. You're not even like
Yeah.
having fun. And then it's like, damn, like, you know what I mean? You don't want it to be that type of situation. So again, always take everything with a grain of salt, and really work out what works for you individually. Because what works, look at Pierce. Pierce been in gold and commodities for a long. I have zero gold. Am I jealous of Pierce? Absolutely not. I'm happy for Pierce. Do I wish I had some gold? Maybe a slight exposure, but I'm also okay and fine without it because I have, various other forms of it. So again, be careful when a lot of things when things are going well and you're like, oh crap, oh if I don't get in, I'm gonna
Yeah.
die, right? Like that fear of missing out is very, very real. It's very real, and you don't have to go searching for it. It will find you.
Well, Pierce, now that you're on the other side of this, because you've probably dealt with some of that pull or that tension of fear of missing out, or maybe just questioning if gold and silver were the right asset. But you stuck with it, right? You stuck with holding your silver, and now you're on the opposite end where it's running up, and maybe there's people like, oh shit, maybe I should get my piece of it. Like maybe I should run towards it.
Yeah.
Like how did you kind of handle, or maybe how have you handled the impulse to like go run after what's already going up? Like, do you have any thoughts on that to share?
No, I mean, I'm blessed. I don't know. I'm not going to name numbers. I have a sizable amount of both. And so it's like for me, I have no kind of want or need to acquire more or even sell. It's like for me, it's kind of like it's like your house. Like obviously it sucks if your house goes to zero, but at least you have somewhere to live, right? And that's the kind of the way I look at it. It's like I have it if it's zero, I have it if it's, if a meteor crashes from, space and it has a whole bunch of silver and gold. Okay, well, I'm gonna have some nice jewelry, but rather than that, it's like I really don't it doesn't affect my life like per se. But I mean it is like there has been times like, right now, especially because the run's been so insane. I'm like m my question to, the kind of the markets, the worldwide markets, is why the hell is everyone else running to this right now? Maybe there's
Here's
something, it's good. The markets are good right now. Why the hell is everybody running to this? Because it isn't just a United
Yeah.
States thing. That's not the only thing that makes
Yeah.
the market bounce. This is a worldwide thing. And so obviously it's all about geopolitical tensions and stuff like that. And, there's wars going on and things happening. I'm just like, okay, like obviously there's going to be a correction. There's going to be a pullback. Gold's not going to, I don't think gold's going to sit at $4,000 an ounce forever. I think on average, it's averaged from 1980, about 8% a year or something like that. And do I think it's going to continuously go up? Yeah, absolutely. But do I think it should be going up 70% in a year? No, not at all. I mean, it's supposed to be a hedge against inflation. If it just beats inflation by just a little bit, all right, you're doing all right, but I don't think I'm not saying it's overhyped or overvaluated or anything like that. It's just something I've been actually heavily looking up recently is why are so many people running to this when obviously yes, there's wars going on. My life is great, but a lot of people other lives are bad, but like there's just there's so many eyes on this and it's kind of concerning right now to where it's like it's just weird.
Now, I was gonna say Pierce is so modest about it. There's somebody else out there right now that's like, sucker, I told you to get it over here in gold and you didn't.
That's
Yeah.
Peter Schiff.
Dude, okay, but see, this is the thing is obviously when I got this gold silver, okay, Peter Schiff, I still love Peter Schiff. Is he a little crazy? Would I love to talk to him? Yeah, he's a little cuckoo sometimes, bro. But he's Peter, right? I just think he's an absolute goofball and he's awesome. He's like a dad in a way. But like I posted, I actually checked on Instagram. I posted about silver and gold when silver was at like $22 an ounce or something like that, sitting at 47. And gold was, I don't want to say, I think it was like 2,700, $2,800 or something like that. We've almost doubled by now. And so it's just like, I'm not going to hit anybody with the I told you so because people hit me with the I told you so with Bitcoin. I'll eat my
It
losses
can
on
always
that.
change. That's the thing. Yeah.
And that's
It's a
it
bit
will
of
always change
it's a bit of an ego booster too for people too. I guess it helps them
for
kind of
sure.
feel comfortable or feel confident in what they're doing or what they've been doing.
Yeah.
Right? It's like, of course, it feels good to be right. It doesn't mean that it went up because you're right. You know what I mean? Like
Yeah.
it's like I didn't
That's
make it go up, right? Like,
I
but
didn't
it
do
feels good
anything,
to kind
dude.
of know that your investment is paying off or is growing. And so I
Yeah,
think
there's
sometimes people get a little too excited over that, and then they end up kind of. And I like the way that Pierce just put it, real modest, real calm about that. So that's dope.
I didn't buy it, dude. And things I don't
Uh,
plan on buying more. That's like I want
yeah.
everyone to understand that. It's not like I'm going out right now and I'm throwing 20 grand in silver and gold. Like, no,
Mm.
absolutely not. I don't plan on buying a penny more. What I have is what I have.
Yeah, Fernanda, go ahead. I'm listening.
no, I was gonna say there's just I know what Pierce is saying is there's the market is rallying and then gold is rallying. Usually those things go,
Yeah,
in other
yeah.
ways, right?
Yeah. Yeah.
But here's like my opinion, my 2 cents here on that. What I see is the S&P 500 or the market itself at the top is being held up by 7 companies that are doing phenomenal reports and revenue. And these companies are doing phenomenal reports and revenue because right now we are in what we call the AI era. And the AI era is being driven by those companies. All those companies are focused on AI. So since they're working on AI, every time they develop a new AI tool, they go up in revenue. But if you think about it, gold is going up because of the uncertainty that we have either here in the US with the Fed and macroeconomically with the wars. But it's also going up because they see that seven companies are holding up the American market. And AI, what they think it could be a bubble, but I don't think it could be a bubble. And then what I also see another factor is that the mid cap companies are the ones being affected here by the Fed decision being uncertain, right? Like we don't know if they're going to cut rates, and the mid cap companies compared to the large cap, which is like Nvidia, are affected because they borrow more money than anybody else to stay afloat. And if they're borrowing money at such a high rate, they can't stay afloat. So those companies are being affected because I trade those companies and I
Mm.
see how all of these companies are not growing. But then you see Nvidia, Apple, Meta just launching AI on every single area, even glasses, and you're like, okay, that's why they're growing. Their sales are doing great because they're focusing on AI, but what about everybody else? So that's why I think Pierce's gold and the US market are going up at the same time for that reason. That's my 2 cents on that, but just a thought.
Yeah, really dope perspective, man. I think that's interesting. That correlation and putting those two together. Yeah, and it's good that you trade at least those companies because many of us may not have that type of background or foundational knowledge on what's impacting those mid-level companies. So that's cool.
Yeah, but nonetheless, it's always interesting just to kind of talk over what's going on, some of the current events in the markets. And I think it's important to highlight there's always going to be something that's grabbing the attention of investors, especially in the short term. And I think it's a great way to circle back to like the core philosophy. At the end of the day, the right answer is ownership. It's owning assets that essentially pay you to own them. Uh, it's not hoarding cash. So I think the only way you can go wrong with investing long term, like over 5+ years, is just storing away cash under your mattress. Like, unless you have some specific plan for it, that's going to be probably the worst decision you can make. The best decision you can make is owning quality assets that essentially pay you to own them. Like that's literally the philosophy of the market hustle. And of course, there's lots of ways you can do it. And you just got to find the right way that works for you. It's like whether it is like, if you're in a situation where you have a lot of cash and you want to play more of the wealth preservation game, maybe something like gold and silver, some exposure to that would make sense. If you're somebody who's younger, who wants to, maybe you're starting from nothing and you want to kind of build that, you're trying to get into that wealth growth mode, then you're probably going to want to own businesses. The businesses that grow and expand, build their profits, long term, historically speaking, that's going to be really what builds the long term compounded growth. And then once you get to a point where you want to like maybe preserve some of your wealth that you've built, then you can always like find strategies, whether it's like maybe something like gold and silver to kind of preserve that wealth, right? It's like there's many ways you can approach this wealth building game. And at the end of the day, I think the only way you can go wrong is by not owning assets. Like as long as you're owning quality
Yeah.
assets, keyword quality, you're going to be fine. Like you're going to grow your wealth. You're going to ideally stay ahead of inflation. Like that's the goal. And ideally get ahead of inflation to where you can kind of compound above inflation so your wealth expands into the future. Like that's literally the game. And I want to, before we officially end this podcast, maybe we can go around just like leaving some practical tips for the listeners because we unpacked quite a bit. And I never want people to feel like, oh, I feel like I'm pulled in all these directions. Like, what should I do? Should I buy gold? Should I buy silver? At the end of the day, like my recommendation to people who are listening, is keep it simple, especially if you're in the first couple of years. Like you don't need to overcomplicate the wealth building game. Stick with index funds. The index funds that hold all the quality companies, whether that's VOO, FXAIX, or if you want to go more broadly, if you want more global exposure to a little bit of everything, we got the index fund VT. Like those are going to be your core wealth foundation builders. Historically, they've done really well at compounding growth for people who are in that wealth growth mode. But nonetheless, building your investing foundation is always step one. But even before that, building an emergency fund so you have some cash set aside for if the market does get choppy or uncertain, You don't have to tap into your assets. You never want to have to sell your assets at a loss or panic sell them because you have to cover the cost for a flat tire. You want to be smart with how you're kind of positioning your financial systems. Like the emergency fund is level 0. Level 1 is getting your investing core set up with like an index fund that holds all of the best companies. Get a basket of all of the best. And then if you want to do like a level 3 where you're adding some spice to your portfolio, whether it's like some extra aggressive growth, or maybe you want to diversify, like maybe you want some gold and silver exposure, maybe you want some crypto, maybe you want to do some active trades, like whatever the hell it is. It's like build the foundation first so you don't get burned. And so most importantly, you can invest from a position of strength rather than desperation. With that being said, before we end this, I want to go through, each of your guys' thoughts of what you want to leave the audience, just perspective-wise, with everything we went over, because we went over quite a bit. And, especially if somebody's only been investing for a couple of years, what would you guys maybe say to them based on everything we've kind of gone over? Maybe Bafi, do you want to start this up?
Yeah, no, honestly, before I even dive into that, I want to say this is certainly one of my favorite episodes so far this year, right? We brought it to a nice boil, and then now we're bringing it back down for a nice simmer, let it chill, let it relax a little bit. So I'm going to do my best attempt to leave the audience with some information in a way that hopefully helps guide them and helps them make decisions. And so I want to focus on the current events and talk through some of these stories and summarize some of the things that many of the audience have heard on this podcast or have been hearing throughout the last few weeks, of what's happening right now, because there's a lot to wrap your head around. So I'll attempt to summarize what's happening and how to navigate it, or at least how I'm navigating it, and hopefully it helps you also navigate it as well, right? So there are a few themes that we're seeing: AI hype / bubble versus .com bubble, right? You kind of see like, you're kind of comparing, what's happening now to like 2000, early 1998, 99. Or is it gonna, so that's talk is there. Obviously right now the stock market momentum to the upside is very, very strong. Yeah, we just touched on gold and silver, which shout out to Piers for being a spearhead in that conversation there. That's also high, right? Unemployment is still relatively high. It's not low, you know what I mean? And so like Josh stated much earlier too, that hey, yes, the market is up, but sometimes it's a disconnect between the market and the economy. Inflation is going up. It's still relatively higher than maybe what we would like. Definitely what I would like personally when I go buy stuff. The Fed is flying blind a little bit in this last month or so here, given the market shutdown. I mean, the government shutdown, and so when it comes to rate decisions, again, some of the uncertainties there. But there's 4 things I kind of want to leave everybody with, and then I'll summarize it briefly. 1, the Fed is cutting rates still, right? So they've kind of just started their rate cutting cycle, which can go for a while, depending on how things play out. There's a good chance we'll probably get 2 more cuts before the end of the year. And then secondly, banks' earnings is coming up next week, right? So there's some immediate near-term things to kind of look out for. And banks so far this year in 2025 have basically beaten earnings on 80% of the time so far this year, right? And a good amount of other industries reporting this month as well. So Q4 earnings should be strong because that tends to be the strongest quarter throughout the year, right? So some of the things to keep in mind is that we see a lot of AI deals and moves happening right now when it comes to the infrastructure demand and build out, right? We've seen Oracle jump significantly because of some of the things they're working on and what the revenue projections look like. NVIDIA, incredible deals as well with OpenAI and some of the other folks. Intel, Fernando brought that up too as well, and how important that has been recently. AMD is the most recent, working out a deal with OpenAI as well, right? Other industries are also making some capital investments into the build out. They're starting to identify utility value and use cases for AI. Now the monetizations piece hasn't fully materialized yet. But the margin increases will come, and eventually it will get to that turning point. And I think it might be sooner than later. Hopefully that would be nice for everyone. And then the third thing to keep in mind is also like US-China tariffs and trade conversations. It's not over. You know what I mean? So that's still something to come. Again, next is really just 5 to 7 trillion of cash on the side, really. And by the side, I'm talking about in treasuries, bonds, gold, right? Money markets, CDs, which most of that will make its way back into the market over this next 3 to 6 years, right? So, but for now, gold is definitely a sweet spot in the short term, with the dollar steady declining. And so we all know that a big part of why we invest is so our money grows at times like this, we see that, we see it in real time. There's the great force and the momentum behind a lot of asset classes going up right now. Psychologically, humans also operate in a very counterintuitive way, where instead of being excited and proud of the fact that, hey, maybe you've been investing for a few years, like Josh just said, right? Maybe you're new to the investment game. Maybe you've done it for decades. You started maybe around COVID as well. Who knows? You've seen and experienced some incredible growth, some up and downs, but overall, some amazing growth. You might be fearful and thinking, oh, is it overblown? Is it overhyped? Are we in a bubble? Is this going to crash? This is what I say. This is what I leave you with. I say enjoy the ride. Enjoy the ride, man, because you put in a lot of work. You've been patient. You've been diligent. You've been dealing with your own emotions and the up and downs. You've been doing research, trying to figure out, what's happening, what's going on. This is part of the credit that you get for all your efforts and patience and looking and investing for the long term, right? So enjoy the ride, have a long-term outlook, keep that long-term outlook. Know that the market goes up significantly over the long term. And this $5 to $7 trillion and the impact that AI will have is going to be a tailwind for your portfolio and your consistency in your growth, because AI will at least bare minimum have as much impact as the internet did for businesses, economies, and our ways of living. And guess what? It is probably going to have 10x more impact than that. So enjoy the ride. Take a moment and breathe and just reflect on all the work that you've done and have fun with that. You know what I mean? Like, let that be something that excites you to keep going and keep moving forward and kind of ignoring the noise a bit. So that's kind of my approach and my take on it, my 2 cents, or maybe 2.5 cents, who knows?
Bobby, that was a great recap, man. And I just want to add, like, I think it's actually healthy to see the market having some skepticism and taking a step back and being like, oh, wait, maybe this stuff's kind of overvalued, like kind of questioning the valuations of some of these tech companies, because it puts pressure on these tech companies to execute in order to justify their current valuations. So,
Yeah.
I think it's healthy. If we weren't having these questions and everybody was just like, yeah, these stocks are going to go up forever, like it's going to be an unlimited ride to the moon, then that's when you're going to want to start asking questions of like, is this kind of bubbly, But I do think it's healthy that we have a lot of skepticism and people are asking those tough valuation questions. And again, I think for anybody listening who is kind of confused or maybe they feel a bit uncertain with how they should approach it, is like the answer is diversification. Like if you don't want to play the game of like trying to predict how to allocate your investments, just diversify. You can diversify across the wide baskets of stocks. Like there's plenty of index funds out there that are suitable for different types of investors, different types of strategies. There's risk profile quizzes that you could take on Google. Like just Google risk profile quiz if you don't know what your risk tolerance might be. And that's going to help give you insights into your own kind of psychology as an investor so that you can make better investing decisions that are aligned with your goals. But yeah, Bafi, great recap right there. I love how you aligned it all with some of the big current events. Fernando, let's jump over to you. Do you have any final thoughts for the lovely Market Hustle community?
Yeah, two things I think of, right? One related to what Bafi mentioned, right? I think today, well, not today, market's not open yet. Tomorrow is still the bottom of any ETF or any index fund or anything. That's the bottom because when you think of the bottom 5 years from today, 10 years from today, that's not going to be the price, right? And these index funds have been growing in the last 30 years or so, and they have not been going down. So if you think about it, this is the bottom. This is like the start. So if you think it's overvalued or you think, it's too late to get in, it's now to get in, it's today or tomorrow, the time to get in. Um, and that's how I always viewed index funds because they're based on so many companies, right? Pushing up or creating more revenue. And that's my first. And second would be to whoever is listening to this and likes individual stocks. A little recommendation for me is look into Stargate. It's a big project from OpenAI. Um, and many small companies are involved in that build out for artificial intelligence. And it's not going away. That's all I'm going to say.
Good stuff, man. And I love the core philosophy there, which is it's never late to invest. Like right now, it's not too late to invest if you're going into this with a long-term mindset. So if you're going to play the game for the next 5 to 10 years, stacking assets is a great move to do. But of course, the short term can always be volatile, can always get choppy, because the future is uncertain, right? It's like anything can happen over the next 6 months where, the market gets a little uncertain. And so that's why you want to approach it from a position of strength. Make sure your money's in order, make sure you don't got a bunch of credit card debts, and make sure you have some cash set aside, whether it's an emergency fund or even an opportunity fund. If you want a little bit of cash ready for any opportunities that kind of present themselves, nothing wrong with that. But at the end of the day, I think it's always important to just make investing a habit, get started. Especially if you're listening to this podcast and you're a brand new investor, you've never even invested yet, you're never going to feel ready. So just dip your feet in the water. Start with a little bit here and there, and just kind of chip away at it. Because again, the longer you invest, the longer your time horizon that you invest for, the higher your odds of profit are going to be. Especially if you're investing in something like index funds like the S&P 500. I mean, keep in mind, the real question is like, do you think these massive businesses, these massive American businesses are going to be bigger and more valuable 10 to 20 years from now? If the answer is yes, then you should invest in them. If the answer is no, if you don't think they're going to be bigger and you think everything is going to collapse, well, that's a whole nother philosophy. At the end of the day, I would put my money on businesses that are going to grow. They're going to do well. They're going to continue to innovate. Yes, there's going to be problems along the way. Yes, there's going to be choppiness and curveballs thrown at us along the way. But if these businesses are good at one thing, it's at finding ways around these adversities and coming out the other side even stronger. And as an investor, that's where I want to put my money. But good stuff, Fernando. Thanks for sharing your thoughts. Pierce, you're last up, my friend. Any final thoughts for the Market Hustle community?
No, I'm just going to stay consistent. I mean, that's pretty much it. It's a 30-year game. And Peter Schiff, if you're listening, I want to have you on the podcast.
Oh, that'd be quite the podcast right there.
I would. That's it, man.
Good stuff, man. Well, yeah. Hey, quick shout out to Pierce for his massive silver play. Again, he's been in silver ever since I met him, which has been a couple of years. So he's not somebody who's just riding the hype. It's been a part of his portfolio, and it's cool that we were able to unpack his thought process and just his experience with the precious metals. If the precious metals keep getting crazier, we'll definitely be talking to Pierce more about that and unpacking it even more. So good stuff. Well, hey, Market House community, this has been a great episode. We talked over quite a bit. Do me a quick favor. If you found this episode helpful or it helped you kind of just look at things a little bit differently, leave a quick 5-star review on whatever podcast platform you're listening in on, as well as share the podcast with a friend. Like if you have some friends who are kind of interested in talking about investing or just even learning more about the investing world, share the Market Hustle podcast. The more people we can help learn about this stuff and understand it, the better the community can kind of grow, the more we can kind of expand the insights we're all kind of sharing here. And then the more, the average person can kind of build wealth, right? Because I think there's a lot of misconceptions of what people think of the stock market. Like they think it's only for the rich. They think if you don't have millions of dollars, you can't touch the stock market. That's completely wrong. You can get in with just as little as $1 and start investing consistently and get some of get your share of the wealth that is being grown in this massive thing called the stock market. So that's a wrap for this episode. This has been great, and we'll see you all back in our next podcast episode. Have a great rest of your day. Bye-bye.